Access to banking is the number one governor of whether or not your business succeeds as a fintech or a money services business or a crypto trading platform or whatever. I've said it before and I'll say it again. If you can't buy a pack of gum, you don't have a real business. We love a good acronym over at Phantom Compliance, and in the current stablecoin bubble, crypto bubble, digital asset news cycle, RWA is really starting to dominate. It's real world assets. So your assets aren't just electrical signals on a blockchain anymore. They're what they've always been. They're gold, silver, jewelry, precious artwork, real estate, and so on. When we're talking about real world asset tokenization, if you rewind to the last crypto bull run, you can see that everybody wanted to do this with NFTs. There was NFTs representing ownership of art, fractionalized ownership of digital artwork through NFTs corresponding to timeshares and so on. And as always, where there's meat, there's flies. So as you have real world assets being tokenized, you also have people just using this to sell timeshares. But what does this all actually mean in practice? There's a couple amazing use cases. There's a couple incredibly bloated, ripe for disruption industries that tokenization can come to. Some of them that we've seen personally is having real estate transactions tokenized and eliminating the bureaucracy and the middling that occurs when a buyer wants to purchase a free and unencumbered good from a seller. So we're seeing a lot of real estate purchases happen. We're seeing fractionalized ownership of luxury real estate, and we're seeing a lot of gold, silver, and other commodity deals being tokenized, having deeds of ownership, transfer over blockchains, and so on. In terms of where it's being meaningfully applied, where there's more traffic, I think for me, the number one that we've seen is a whole lot of real estate purchases, a lot of crypto OGs that want to monetize their crypto. They want to become citizens in Portugal. They want to invest in a hotel. They want to do this. They want to do that. They're maybe off-ramping some crypto to fiat and doing that transaction, or they're doing it with a forward-facing organization that has already tokenized that asset and going straight crypto to crypto for it. Or you're seeing commodity purchases, especially high volume commodity purchases, being tokenized and being transacted in a purely digital way without any bank wire delays, without any banks holding you for KYC and invoices. And of course, then platforms like Robinhood have given nonstop 24/7 access to settlement and digitization of securities and other non-crypto, but just as intangible assets. So how much of the current hype is theoretical or theater is an incredible way and a good lens to approach any of this stuff, because I referenced NFTs and the NFT market is pretty much dead in the water. I think everybody was like, what's the new digital trading card? Oh my God. And I collected hockey cards as a kid. I had a baseball card in my spokes just like everybody. But I would suggest that tangible trading cards are worth more than NFTs. The NFT market is dead. And I think RWA is, let's not say vulnerable to becoming irrelevant, but there's a lot of signals on it that suggest it could be this cycle's NFT. For example, there's no regulatory framework, and no regulator aside from Dubai and Singapore has proposed a framework that encompasses it, addresses it, gives compliance guidance for it, and says it's here to stay. Everybody else is pretty new and we don't know, and we don't want to make a statement on it, but maybe it's behaving like a security. There is a lot of hype. I know that there's a lot of very high value precious metal transactions out there, a lot of very high value commodity transactions that I think would benefit from faster settlement, immutable transaction records, and independent verification of those sales. But have we achieved any real level of adoption or any real level of the technology supporting the claims? I don't think so, because we're not even there with stablecoins, and we're frankly not even really there with credit cards and global credit infrastructure. We're starting to get a lot of questions from clients and a lot of inquiries from longtime partners and entrepreneurs and founders that are really excited about the tokenization of real world assets, really excited about adding these kind of transactions to their platform and servicing customers that want these things. And they're all asking, can I do this as a Canadian registered money services business? Can I do this as a Bank of Canada registered PSP? Can I do this in Canada at all? And I'm a sport, so I went out and did a bunch of research when all these clients asked me this question. And I found that there's an actual dearth of commentary and public statements from Canadian regulators about the tokenization of real world assets. So you have the primary regulators being FINTRAC for money services businesses, Bank of Canada for payment outfits, and the Canadian Securities Administration, CIRO, and the provincial securities commissions for anybody that provides access to a security or anything that behaves like a security. If you look at those three regulators, FINTRAC, they've made no statement. They say, listen, virtual currency services are regulated and you have an obligation to have a compliance program and to file reports. Other than that, we're not saying, hey, this is a virtual asset, this isn't, whatever. Do your own research, consult your lawyer. Bank of Canada is saying, if you perform a payment transaction for an end user or allow an end user to hold a balance in fiat currency during the purchase of a tokenized real world asset, then you may have an obligation to register and you may be in scope as a payment services provider. And the CSA has said, okay, when we're reviewing these things, we have to determine if they behave like a security. So there's a test. In the US, it's called the Howey test. In Canada, I think it's called the Pacific Coast Coin test. It's all the same test. Is there an investment of money in a common enterprise with an expectation of profit, and the profit is derived from the efforts of others? So when you're tokenizing a real world asset and when you're selling access to or ownership of that asset to an investor, to a buyer, you have to ask, is the buyer investing? Are they parking that money for a period of time and hoping to get it back later? Sounds like an investment. Do they want to transact with immediate settlement? So, they send you money and you get a digital gold token immediately. Maybe that's a little bit different because you're not getting future deliveries, so it's not an investment. Okay, fine. Common enterprise. If you're tokenizing that real world asset, is there fractionalized ownership? Do you own part of it? Do you own all of it? Are you part of a pool of people that own a group of it? There's a vault full of gold somewhere. Are you expecting to make money? I think for the most part, we're all expecting to make money when we do things that involve money. Aside from just a pure donation, which tokenized donations maybe are the only use case that will never meet this prong. Anytime anybody's going into virtual assets or tokenized real world assets, they're hoping to make money. Nobody's, gee whiz, I hope I lose a lot of money. And then, of course, if you're deriving that profit from the efforts of others, unless you're out there mining that gold, finding new mines, filing the national instrument paperwork, and so on, you're expecting to derive that gain from the efforts of others. So when I look at tokenized real world assets, I think for things like traditional commodities and so on, it's really easy to see how they would meet the prongs of the Howey test and likely be considered a security in a place like Canada. And keep in mind, we're a jurisdiction that have said stable coins that are pegged to government money are also securities, but we haven't made the same government money securities eligible. So it's incredibly likely that Canada will treat this as a security. And when we look at the regimes around the world that have already regulated this, Singapore, Dubai, for example, they're regulating it much like you would regulate a security and much like you would regulate a security broker dealer. Do you have ongoing audits? Do you disclose where customer assets are held? Do you have an obligation to make every single investor or participant in this whole within 48 hours if they all want their money back? How do you prove where your reserves are? How do you prove that the underlying asset is stable and doesn't expose this person to insolvency or something outside their risk appetite and so on? So I think RWA just putting a big old bow on this thing is somewhat immature as an industry. And I don't think that the Canadian regulatory regime is necessarily nuanced enough to capture it rapidly. Keep in mind, this is the same jurisdiction that said, we think the world's largest market cap stablecoin is a security and chased, Tether out. So are we going to immediately say, let's tokenize all our gold, let's tokenize all our real estate transactions, let's move the purchase and sale of artwork, let's fractionalize everything? I don't think it's going to happen. There is a hype curve, there's an adoption curve, and there's somewhere in the middle. And I think Canada falls below the hype and the adoption curve currently, but we remain hopeful that any of the real use cases for this, any of the things that tend to disintermediate money and tend to make transactions faster and more user-driven, is a positive thing. We've done a lot of content about this, and there's a lot out there in the market. In March of 2024, there was a cyber incident impacting the Canadian Financial Intelligence Unit, taking public systems offline and creating a lot of backlogs because there was a lot of impacts on public reporting, the FinTrack web reporting system. There were a lot of impacts on the money services business registration, renewal, and change process. And I think there were a lot of impacts on a number of other things that FinTrack touches too. I don't know how it played out in the armored car and real estate section and so on, but I mean, there were a lot of changes around that time too of the FinTrack API becoming better than it's ever been and report submission being super streamlined if you can afford to integrate via API. And we've also seen in the last few weeks, I think it's not even 5 weeks yet since the Bank of Canada's initial projected deadline of September 8th for processing the payment service provider applications under the Retail Payment Activities Act has come and gone. We've seen these two kind of events create some uncertainty, create some delays, create some missed expectations and misaligned expectations for a lot of our clients because it's like, are you a money services business or not? Yes or no? Oh, you've added a third brand to your parent company, but that brand isn't displayed online and I have no way to verify it and the government isn't processing that change. Or you fired your CCO and hired a new CCO and you're required to update that information within 30 days legally, by the way, and you filed that update, but you can't prove it because you never received acknowledgement from the government. The change hasn't been processed and you're not sure if you're in compliance or not. So a lot of our clients, when they're waiting on these kind of things, delayed access to filing reports or delayed confirmation of changes being filed, or God forbid a renewal date come and gone and they're not sure if they're expired or not, they're out there saying, okay, I guess my only option is contact FinTrack, and FinTrack is still backlogged, so they're not replying to that email either. And if they're also PSP registered, they have their banks, their partners globally, maybe their investors, anyone internally that's managing their poor CCO saying, why am I not showing as approved on the Bank of Canada's registry of payment service providers? Because I'm pretty confident we applied on time. I think we paid the fee and we put a lot of work into developing all these things. Why haven't I obtained a result? Clients are facing threats to infrastructure, closed or suspended bank accounts, held wires, and legitimacy struggles based on these backlogs. And I think for startups, it's incredibly impactful because a lot of the reason that people chose Canada over Europe or chose Canada as a building block towards other regimes in a global regulated entity group is because it was faster, it was lower costs, and it was transparent. But as these benefits are eroded by regulatory delays, I mean, it's maybe not faster than other regimes. I'm not sure if it's expensive, more cost effective or not, because you have overheads for months while you're waiting for these approvals. I think it's just making people look for other licensing regimes, looking for other paths that allow them to start rapidly and then build more expensive, more long-term licensing thereafter. For our clients, we have a number that are just saying we're not sure if we're legally allowed to do our business or not while we're waiting on these approvals, and we can't find a path to good advice about it. And we can't really tell them either, because almost all of our clients are awaiting approval from Bank of Canada under the RPAA, and our backlog with FinTrack at any given time is at least 50 plus files waiting for processing for new registration, renewal, update, or addition to the reporting system. So if that's what's happening in our firm's ecosystem or world, I don't know what's happening for the rest of the world. I can only assume it's more of the same at a larger scale. And in terms of the impact on Canada's perception as a fintech hub, I think we're hamstrung by this. And I think we're also hamstrung by the fact that it's incredibly difficult to access banking for money services businesses in Canada forever. So you have the front lines of regulation, which are governments, central banks, etc., being slower to respond than expected and developing degrees of opacity because these delays aren't usefully explained or communicated. And then you have this second de facto line of regulation, which is you can't access banking. If I was a founder that didn't know how to navigate the convergence of these 2 points, I would be very hesitant to invest in and build in Canada because it's just scary and off-putting to look at a big wall you have to climb when you're starting a business. We would always, for example, have 10 to 15 MSBs in progress at any given time before the FinTrack cyber outage. Now it's more like 5. I've just taken a huge revenue cut. As we're examining these kind of delays, these backlogs, these challenges, these regulatory issues, we're always faced with the question, and we get this from prospects and tire kickers and existing clients that have been with us for a long time, saying, is the Canadian money services business still, like a gold standard, passportable, globally recognized solution to suggest legitimacy, communicate to my banks and partners that I'm doing the right thing, that I'm operating in a compliant way, and is it still viable for me when I'm considering startup costs, time to market, and perception from regulators and partners? And I think the answer is that the Canadian MSB is still viable, but you need a specialist now. So years ago, it was pretty easy to register your money services business, to interact with FinTrack, to develop a compliance program and whatever. And when I say easy for someone with some experience in finance, FinTech, or the internet, I don't mean like your average person could just really easily career switch from working front of house in a luxury restaurant to running a compliance firm, for example. But I think it's still viable, but you need a local expert now. And I didn't expect to be pumping my own tires in this segment, but unfortunately I'm going to, because what we've seen time and again is clients have submitted these things themselves. They lack the command of relevant language to bring urgency and attention to their registration. They lack the experience to explain their business and their approach to compliance in a way that motivates action on behalf of the government. And they lack the intestinal fortitude and perseverance to follow up on this stuff ongoing, right? So we see clients come to us like, hey, I've been without an email reply for 8 months. My registration has been stalled for 14 months. I'm hemorrhaging money because I can't service the Canadian market. Can you please help me? And thankfully, I don't want to position us as any sort of rainmaker, but we've been able to assist those clients. And I think the advantages of the money services business still exist in the market if you can access them. It's becoming more difficult, and personally, I think that's a good thing. I think it should be more difficult to get these things because there's an entire economy, almost a shadow economy, of these people that register money services businesses and then sell them, and maybe they transfer the ownership and maybe they don't. They run little advanced payment scams. They're out there jumping bad, doing things. So I think having this in the hands of specialists and having barriers to entry that kind of require you to have history, experience, and money to access the registration process are a good thing. I think that this should be hard to obtain, but I think it should be hard to obtain for bad actors. I think there should be a good path if you can qualify that either you can afford to have an expert with you, or you have the backing and the experience to do it yourself. So I think what we're looking at from this perspective is just, it's harder to get. I don't think that's a bad thing. And I think comparably to all these other global regimes, we have clients that get like a Polish small payment institution, or they do a South African crypto license, or this or that. I think Canada is still at parity. And I think the permissions that we're able to offer access to are at parity. The only piece that is missing is clarity on stable coins if you're not a securities regulated platform, if you don't deal with retail customers, if you only deal with accredited investors and businesses, and if you're immediate delivery. I think you should be able to access the hell out of stable coins. And I don't think that path exists in Canada right now. And I don't think that public guidance exists. And absent that public statement, I think it might not be as workable as some of these other jurisdictions. And keep in mind that the EU regulated stablecoins into oblivion as well. So it's not like people are running to Europe to continue to trade USDT either. Access to banking is the number one governor of whether or not your business succeeds as a fintech or a money services business or a crypto trading platform or whatever. I've said it before and I'll say it again. If you can't buy a pack of gum, you don't have a real business. If you can't pay your employees in the government money that they expect and need to live and need to feed their families, you don't have a real business. And I think there was a lot of fanfare when Trump was being elected that he was going to dismantle the democratic infrastructure of Operation Choke Point and give free and unencumbered access to banking, to crypto players and all this. And there's been no similar fanfare in Canada, by the way, regardless of multiple people in industry and in government saying we think that access to banking, especially for financial services companies and crypto companies, is unfairly restricted. We live in a monopolistic country, so this access is still throttled and still controlled by a small group of players. And after Trump got elected, I think a lot of people in the market were expecting, okay, a lot of banks are going to be super comfortable operating now. Anchorage Bank, one of the really prominent cross-border digital-first banks, had their consent order lifted, and they could again bank clients cross-border and offer access to USD to crypto companies and so on, which was an incredibly positive signal. We saw maybe a thawing of some of the banking winter, but I think that this has been a lot of fanfare and not a lot of rubber on the road, because we still have multiple clients struggling to access just the basics of multi-currency bank wires. The access for on and off ramping of USD, the global reserve currency still, that a lot of users in a lot of economies want to use and expect to be the currency that is underpinning their transaction. So has access to banking truly improved in Canada? Absolutely not. We still have the two fintechs that have controlled access to banking for fintechs and MSBs staunchly entrenched and making sure the majority of that traffic goes through them. We have a couple challenger banks and credit unions that are willing to take on a high risk client, but only if you have the compliance horsepower and budget to ensure that, you know, you're on side with their requirements to be at a manageable level of risk. And in terms of new challenges for founders, unfortunately, the access to banking thing is a tale as old as time. It's the exact same situation that prior to crypto being regulated had everybody owning at least one marketing company that they used to get customer wires. It's the same thing that drives businesses to miscode credit card transactions. It's the same thing that has people today. Unless you're Coinbase, you can't access these global tier one banks. And one of the crypto friendly banks that we work with and did some work with in Canada, I said, hey, now that I did you guys such a good turn at such a great price for your Canadian business, maybe you could bank a few of my clients. And they were like, hey, listen, the only way we're going to take one of your clients is if they do over $100 million a year. So even for them, when they're the people's champ and the underdog's best choice, they still only do it if they're going to make money. So has access to banking improved? No, absolutely not. And I don't think it really ever will.